that we're running a bigger deficit than we thought, and the silver inventories available to cover that deficit are less available than we thought at the same time, and that brings the the crisis in the silver market, where one of the big exchanges defaults and just pays cash instead of silver, and everybody realizes it's all gone and the price goes straight up. That was kind of out there somewhere in the indefinite future. So now maybe it's in the intermediate term future now, where we actually can put a time frame on it, that in the next few years, the dynamic in the silver market changes in a really dangerous way for people who use silver, and an exciting way for people who are stacking it right now.
The US Geological Survey has publicly stated that the world's silver supply will be depleted by 2025. This will make silver the first widely used industrial commodity to have its in-ground supply exhausted. Forecasts pointing to a fourth straight yearly deficit in global supplies and a rise in demand to its second highest level on record raise the potential for silver prices to rally and even roughly double before the end of 2024. As the founder of DollarCollapse.com, JohnRubino is a renowned figure in the financial world and has garnered a reputation for his insightful analysis, particularly within the precious metals market. In this video, JohnRubino suggests that current analysis indicating the depletion of above-ground silver stocks within 2 years could accelerate a crisis in the market. He predicts a shift in the silver market dynamics, providing opportunities for current investors. In a note to clients, analysts at GSC Commodity Intelligence wrote that silver prices trading between a range of $37.50 to $50 an ounce may become a real possibility this year. However, that forecast may prove to be conservative if gold prices continue to scale new highs in the coming weeks and months ahead. In JohnRubino's assessment, the silver market is on the brink of a profound shift, with industries like solar panel manufacturing exerting unexpected pressure on silver reserves. He envisions a bullish trend ahead for silver prices. While drawing attention to a significant increase in silver imports from India, Rubino underlines heightened demand from Asian markets beyond initial expectations. Silver imports skyrocketed by 260% in February, hitting a record high of 2,295 tons. That was up from 637 tons in January, according to a report in the Economic Times of India. This, in conjunction with various factors, fosters an optimistic outlook for investors in the silver market. While Rubino advises against extreme measures, as he suggests a steady accumulation of silver through dollar-cost averaging as a prudent strategy. Now, we present the clips of JohnRubino's insights from his recent interview with Liberty and Finance. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
Yeah, well, several things are happening in the silver market. One is that silver is now a market that is in deficit. In other words, the world's silver mines aren't producing enough silver to satisfy the current demand of fabricators, people who use silver industrially, and investors, people who buy silver coins and bars. So what we're doing now is we're using up the available stocks of silver out there. And that's just generally, conceptually, that's a bullish thing. That means prices will go up over time to bring things back into balance. But there are reasons to think that the consequence of the silver deficit is going to be felt sooner and in a bigger way maybe than you might expect. And one is that I think it was Bix Weir who looked into the numbers on how much silver is being used by the solar panel industry, and he found that it's much more than the silver experts out there thought up to this point. So that the deficit is actually bigger than we were thinking. And then at the same time, another analyst whose name I don't remember came out with an analysis of the above ground available silver to soak up the deficit, and he said it's going to be gone in 2 years. So it could well be that we're running a bigger deficit than we thought, and the silver inventories available to cover that deficit are less available than we thought at the same time, and that brings the the crisis in the silver market, where one of the big exchanges defaults and just pays cash instead of silver, and everybody realizes it's all gone, and the price goes straight up. That was kind of out there somewhere in the indefinite future. So now maybe it's in the intermediate term future now, where we actually can put a time frame on it, that in the next few years, the dynamic in the silver market changes in a really dangerous way for people who use silver, and an exciting way for people who are stacking it right now. So who knows? But it's nice to see those numbers coming out. Oh, and one other thing that just came out that's favorable for silver is India just announced that their silver imports in the most recent February were up like 260% year over year. So that means that it's possible that demand for silver from the Asian markets, which are big buyers of silver normally, is actually higher than is being built into today's models. So put it all together, and the silver story is really exciting. So here again, I don't think you want to just mortgage the house and buy silver, but I do think that a good dollar cost averaging program that gets you a certain amount of silver or a certain amount of dollar value of silver each month is probably a good thing to have now if you haven't already started one.
JohnRubino explains that during a bull market for precious metals, as the gold-silver ratio widens, focus turns to silver due to its affordability. This surge in demand causes silver to outpace gold in percentage gains. He further observes the current stage where silver is surpassing gold, along with silver miners outpacing their gold counterparts. Analyst foresees a potential parabolic surge, possibly propelling silver beyond $100 per ounce. Let's look at silver's recent history. The highest price for silver was just under $50 in the 1970s, and it came close to that level again in 2011. The commodity's price uptick came on the back of very strong silver investment demand. At the outset, Rubino underscores the unpredictable nature of global events, particularly potential conflicts in the Middle East, and their potential repercussions on precious metal markets. Let's get back to the interview.
I think that's a normal stage of a precious metals bull market. When it just gets started, people buy gold because that's the big name, and that's the asset they associate most with inflation hedge and safe haven asset concepts. Once gold reaches the point where, like you said, the gold-silver ratio is historically wide, then people tend to start, they look at the price of a Krugerrand and think, wow, $2,200 for just this one little coin. And then they look at how much silver they can get for that amount of money. And it's quite a bit. There's a nice big pile of silver coins you can put on your table for the price of one Krugerrand or one gold eagle. And people start doing that instead. They start buying silver because it's cheap. And it's a very illiquid market in the best of times. So when that new demand comes in, it starts pushing up the price at a rate that's higher than whatever gold is doing. And you get the gold-silver ratio shrinking, and silver outperforming gold, and the silver miners outperforming the gold miners. And we're kind of in that part of the process now, based on what we've seen this year. Now, the thing is that it doesn't just end with today's kind of action. It usually ends with a parabolic move where gold spikes, but silver dwarfs the percentage gain in gold. That happened in 1979 to 1981, give or take. And it happened in 2009 to 2011 or so. So if we see that kind of action again in gold and silver, then silver is going above $100 an ounce from where it is right now. So I expect that to happen. It could be derailed by all kinds of crazy other things going on in the world, but just based on fundamentals, I think that's the kind of thing we'll see in the next few years. And it'll be, a lot of fun and a lot of validation for the people who have been waiting for this past decade for something like this to happen. That's the tricky thing, isn't it? Because gold and to an extent silver are safe haven assets. So when the world goes crazy, you tend to see people buying gold and silver. At the same time, we just don't know what's going to happen in the Middle East. If if Iran's attack threatens the U.S. in any way or hurts Israel in any meaningful way, and then they respond by taking out, say, an oil refiner in Iran, and that causes the oil market to spike, and maybe oil goes to $150 a barrel, and that's horrible for stocks. And if stocks tank, that might bring down precious metals, even in an environment where money is flowing into safe haven assets. So you just don't know. I think this is why you dollar cost average in precious metals or anything else you want to get into. Just don't jump in with both feet, because there's usually cross currents. There are usually good things and bad things that could happen. But if you're just programmed in to buy the same dollar amount each month, these kinds of things we're talking about are not nearly as important, because if something happens that knocks the price down of the thing you're buying, then you get more for that same number of dollars. And you can take some solace in that, and your average price improves. And so it's not that bad. And I think now more than ever, we should be programmatically trading. In other words, don't let your emotions dictate what you spend money on right now, but set up a plan and just stick to that plan, and then let the world unfold the way it's going to unfold, because it's absolutely unpredictable right now.
The silver market seems primed for both excitement and uncertainty, with supply shortages and rising industrial demand shaping its future. As global silver consumption surges, driven by robust industrial demand and a rebound in jewelry and silverware demand, the stage is set for a potentially bullish future. With projected consumption hitting record highs in 2024, reaching the second highest level in history, the high demand could likely exert upward pressure on silver prices in the coming years. How do you plan to adjust your investment strategy in response to the evolving dynamics in the silver market? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.